Welcome back. Well, for the mid-cap index, it's up around 0.5%. So that's the only index which is really holding its head above the water. Just watch out for Paytm because now it's at the low point of the day, down around 8.5%. The intraday chart will tell you there's been a sudden dip which has taken place in that particular counter, as you can see at the low point of the day as we speak for Paytm. But let's move on to other stocks then. Indiabulls Real Estate is also under pressure. This is following some key leadership changes which have taken place. Nimesh is here with the story. He gets us more.
The stock is down 5%. I'm surprised, the market has taken this news negatively. But first, for the news, the company has announced that there has been a change of management at the top end. So the current MD has resigned, which is Mehul Johnson, and he'll be replaced by Sachin Shah, who will be the ED for the next 5 years. Apart from that, additionally, they have also appointed 3 independent directors on the board for the period of 3 years. Now, to read this, it effectively means that there will be further control in the hands of Embassy. Remember, Embassy and Indiabulls Real Estate is looking to merge, and that NCLT order is pending. The next NCLT hearing for this merger is scheduled for tomorrow, which is March 1st. So that will be important to track. But in the fresh development, there's been a change of guard in terms of top management. The current MD resigns, and most of the new board is largely appointed by Embassy. So the control goes largely in favor of Embassy going forward, and the next trigger will be the NCLT approval for the merger.
Okay, all right, Nimesh. Well, that is on Indiabulls Real Estate. But the other stock, which is in fact dragging, is Cipla from the Nifty space. It is down around 2.5%. And the reason is that the details of the Form 483, which are these 8 observations which were issued to its Pithampur facility, have now become public. Now, the street is fearing that these observations are not going to be easy to resolve. So, for example, there are not expected to be data integrity observations within the 8 observations. That's the assessment as of now. But they are still complex issues, which is going to take them time to resolve. When it says time to resolve, then that means that there could be a possibility of a re-inspection from the US drug regulator, as well as an escalation to an official action indicated status, which means that new drug approvals could probably get impacted. When you talk about new drug approvals from this particular plant, the one that the street will be focusing on is Advair Generic, which is an inhaler. Now, that was slated to be launched probably by Q1 of FY24. Because these observations will take time to resolve, that means that this particular drug is probably going to get pushed further in terms of a launch. It's estimated to be around 5% of EPS for FY24 as well as FY25. Overall, the plant is also important. There are respiratory as well as oral products which are filed from this facility. It is 25% or 20% of sales approximately on an FY20, 20% of EBITDA. On an FY23 basis, and hence the overall importance of the plant is also significant. So the street is probably bracing for the worst when it comes to this particular facility.
Okay, and that's why the stock is down almost 2.5%. But let's do one thing. Let's take a quick commercial break. On that note, on the other side, Sachidanand Uttekar will be joining in with some trading strategies. Do stay tuned in.